If there's one thing I've learned in my time as an outsourced accountant and tax advisor, it's that most business owners don't understand the proper way to pay themselves. They're either overpaying themselves and draining all the profits from their business, or they're underpaying themselves and getting hit with huge tax bills at the end of the year. But what if I told you I had a 3-step process that makes paying yourself simple, tax efficient, and stress-free? Today, I'm going to show you exactly how I help my clients pay themselves and show you the exact strategy that I use to do this, all while saving money on taxes in the process. Here's the thing, when you start a business, no one hands you a guide showing you how to pay yourself. Also not taught in school, and nobody ever really puts anything out on how to do it. So you just kind of have to wing it. Maybe you transfer money from random accounts into your personal account, and some people even wait till tax season to figure out how to pay themselves and how much they pay themselves. But I've seen how this story ends. I had a client one time named, we'll call him Jake. He was crushing it in e-commerce. He was making well into 6 figures, super profitable business. But he had no structure to how he was paying himself out. Come tax season, he got hit with an extra $25,000 tax bill that he was not expecting. This one mistake set his business back an entire year and slowed the growth of his company. Does that sound familiar? That's why I want to walk you through a payment structure and how to pay yourself and the steps that I take with my clients in order to give you control, clarity, and confidence in going forward on paying yourself. I'm Harrison Patton, an outsourced accountant and strategic tax planner. I've worked with solopreneurs up to people making well into 6 figures in their business. And one of the most common questions that I get is, how do I actually pay myself? And the truth about this is that there's no one-size-fits-all answer to this that provides a solution that works for everybody. But there is a 3-step simple process that I've formulated that can show you the route that you need to take for your unique situation. So step 1 is simply deciding the method that you're going to be paying yourself. There are 3 main ways that business owners can pay themselves. First, being a salary. Second, owner's draws. And third, distributions. So with a salary, think a W-2 paycheck. This is commonly seen in S-corps, and the taxes come out automatically with withholding taxes that you should be withholding for yourself. The second is owner's draws, which are simply you take money from your business account to your personal account, and this is most often seen in sole proprietorships and regular LLCs or partnerships. The kicker here is that taxes are not withheld on these owner's draws. Owner's draws, you take money out as needed, but the taxes are not withheld. And lastly are distributions. Once again, this is seen in S-corps, and the magic here is that these are not taxed as self-employment income. You skip over that 15.3% to pay for your FICA taxes. So let's think of an example. Say you're making $120,000, and as a sole proprietor, you would owe federal, state, and self-employment tax on the entire thing. Those would all come out as owner's draws. But if you're an S corporation, you might pay yourself $60,000 of salary and $60,000 of distributions. On this, you would only owe the self-employment tax on the salary, not on the distributions. This alone could save you $9,000 to $10,000 in taxes just from that one simple move and having a structure of how you're paying yourself. So step 2 of how to pay yourself as a business owner is to set up a consistent system. Here's where most people fall apart, because paying yourself should not feel like a guessing game. I personally recommend a 3-account system for you to run. The first account is a business checking account. This is where all of your revenue goes. The second account I recommend is to have a business owner pay account. So this is where twice a month money will get pooled, and this is the amount that you will pay yourself bi-weekly or at the frequency that you choose. And the third, and this is very crucial in a business, is to have a tax savings account. The worst thing that I see happen to business owners is they're paying themselves throughout the year and then they don't have any money set aside for their quarterly estimated tax payments. Every time that you pay yourself, you should set aside 20 to 30%, depending on your tax bracket, in order to be devoted to your taxes that you'll have to pay quarterly. By having a structure in place like this, you're never going to be panicking come April, and your business structure works in synchronicity with the rest of your business. For example, I had a coaching client once who was making $8,000 a month, and she was pulling money out as she needed, which is okay. That works, it's legal. But she didn't have anything set aside. She didn't have a system in place to cover her other needs. And so what we did is we set her up to start paying herself $4,000 consistently while setting aside another 25 to 30% of her revenue for her tax account. Come tax season, she had already set aside enough and paid through those quarterly estimated tax payments to not be in a panic during that April season. So the third step is something that I feel people don't get told about enough, and that is to adjust and optimize with your business growth. This is the part that I feel people neglect to look at. As your business grows, your payment system changes as well. You don't have a set in stone payment system that you have to stick with for the rest of your life. As your business grows, the percentage of your income and the style that you pay yourself, whether that be as an S Corp or an LLC, will also evolve. So you might start as a sole proprietorship or just a single member or partnership LLC, but as your business grows, once it starts hitting that $40,000 net income annual amount, you want to look into making the S Corp election so that you can save on that self-employment tax. Now you can do that before, but with the additional filing fees, the additional state fees, and additional compliance requirements, it's likely not worth it until you're at that $40,000 rough estimate on net income for the year. And as your income continues to grow, for example, if you're at $50,000 to $100,000, your salary and distributions ratio and percentage of your income that is devoted to payroll will also differ. So you want to make sure that you're adjusting that as your business continues to level up. And additionally, once you get into the extremely high tax brackets where you're making $500,000 plus, you want to start looking into advanced payroll strategies such as paying family members for service, accountable plans, and other retirement accounts that can lower your taxable income before contributing to your payroll and your distributions. So the key is to revisit your payment system at least once a year. Your business, think of it like a living organism. You wouldn't want to, as a person, wear your same clothes that you wore at 12 years old. You're going to consistently check back in and update your wardrobe to fit what is going on with your business. As you grow as a person, you change the clothes you wear. Same thing with your payroll system. As your business grows, you want to go back and check and make sure that everything is still aligned and optimized for your business. So just to recap, here's the plan that you're going to be taking and the steps that you're going to actively look to take. First is to choose your method. Are you going to just do regular single member LLC owners distributions, or is it time to start looking into the S Corp and doing a payroll and distribution split? The second thing is that we're going to set up a system. You're going to pay yourself consistently and save some money on the side for your quarterly estimated tax payments. And third is to adjust for growth. As your business grows, you need to be reviewing quarterly or yearly and making sure that your current pay system is optimized for your business. So this framework I've laid out is how I personally help my clients go from stressing about their payroll and in a state of confusion to clearing it up and providing clear steps and making it a clear picture that anyone can follow. This predictable system keeps you tax compliant while also taking away the stress from your life. So if this was helpful and you want more resources to help optimize your accounting and tax systems within your business, you can click the link down and below and you can get my free tax playbook to see more strategies that I use day to day with my clients. And if you're tired of trying to figure this out alone, you can also click the other link down below and you can schedule a call with me and we can discuss how I think that I could help you on your tax savings journey and see if we're a good fit to start working together. Don't leave paying yourself to chance. The IRS isn't waiting around to help you, but I am. As always, never stop your relentless pursuit of continuous improvement. I'll look forward to us talking again soon.